All right, let's dive deep into credit today.
Sounds good.
Scores, reports, the whole thing.
Yeah.
We got a ton to unpack from this training we dug into, and it's actually way more interesting than you might think.
It really is. What I find fascinating is just how much control you actually have when it comes to your credit.
Right.
We often feel like these scores are totally out of our hands, but the reality is once you understand the system, you can take the wheel.
Exactly. And get this, the U.S. credit system is like totally unique.
Hmm.
It's a big reason why we can get things like instant credit approval and often lower interest rates compared to like most other countries.
It is. It's like this well-oiled machine working behind the scenes, constantly sizing up financial risk. But if you
Yeah.
don't know how it works, it's easy to feel lost or even, powerless.
Yeah, for sure.
So today, we're giving you the owner's manual.
Love that. The owner's manual to our financial freedom.
Yep.
Okay, so let's break it down. We've all heard of these credit reporting companies, right? You got Experian, Equifax, TransUnion. But like, what do they actually do? If they're not the ones saying yes or no to loans,
Yeah.
what's their role?
They're essentially data collectors. They're organizers.
Okay.
Imagine like giant libraries filled with financial data.
Okay.
They gather information about your accounts from lenders, package it all up into your credit report, and then make it available to businesses that need to assess you.
So they're not making the final call. They're more like information brokers.
Exactly.
Got it. So who gets to peek at this information? Is it just lenders? Or like, can anyone see my credit report?
Lenders, definitely when you apply for credit. Also, companies making those pre-screened credit offers you get in the mail.
Okay.
Employers can look at a limited version, but only if you say it's okay. And it won't even include your score.
Mm.
In most states, insurance companies use industry-specific scores to assess risk, which are different from the credit scores we usually talk
Yeah.
about. And of course, government agencies might access it for things like licenses or security clearances, but again, only in very specific situations.
So there are some pretty clear rules around who can see this stuff. It's
Yeah.
not just like an open book for anyone to read.
Right.
Can I see my own report, though?
Absolutely. And you should. You can get your report for free from each of the bureaus as often as you like, and it won't ding your score. It's actually smart to check it regularly to make sure everything's accurate and up to date.
Free. Okay, now we're talking.
Right.
Speaking of free, you mentioned those pre-screened credit offers that, let's be honest, we usually just toss in the recycling bin.
Yeah.
You're saying those can actually be a good thing.
Think about it. Those offers are a sign that companies see you as a good potential customer, right?
Okay.
They wouldn't send them if they thought you were a credit risk.
That's true.
Plus, they can be a great way to compare rates, rewards programs, all that good stuff.
Mm-hmm.
You always have the option to say no, but you might be surprised at what you find. Maybe that lower interest rate on a balance transfer is exactly what you need.
Okay, so I'm starting to see those offers a little differently now.
Yeah.
Before we get too excited about credit cards and stuff, though, let's get into the nitty-gritty of what actually makes up my credit report.
Sure.
Is it just a list of all my loans and credit cards, or is there more to it?
It's actually more comprehensive than you might think. It starts with your identifying information, your name, address, social security number, date of birth, even previous addresses.
Makes sense. So it's got all the basics?
Yep, all to make sure everything's accurate and prevent identity theft.
Okay, what else is in there?
Then you have all your account information, installment loans, revolving accounts like credit cards, charge accounts.
All right.
But here's where it gets interesting. Your report might also show positive payment history for things like your cell phone bill, utilities, even streaming services like Netflix.
Wait, hold on. Streaming services. You're telling me my Netflix subscription can actually help build my credit?
Absolutely. It all contributes to a bigger picture of how you handle your financial obligations.
Okay.
We'll dive into the specifics of how that works a little later, but essentially, those consistent payments can show that you're financially responsible.
That's really interesting.
Right.
So my credit report is like this big picture of my overall financial reliability.
Yeah.
But what about things like my salary or what I buy at the grocery store? Are those included too? What doesn't make it into the report?
Good question. You're right. Your salary and what you buy at the grocery store are not part of your credit report.
Okay.
It doesn't track your income, your bank balances, or any of your specific purchases. It's not designed to judge your spending habits, just your history with credit and debt.
So my late-night online shopping sprees are safe.
They are safe.
Okay, that's a relief.
Yeah.
What about things like bankruptcy? Is that public record part of the report?
Yeah, bankruptcy is included, but it's the only public record that's really considered relevant to your creditworthiness these days.
Okay.
The focus is really on how you handle debt and credit, not like every aspect of your financial life.
Got it.
Yeah.
So we've talked a lot about the credit report, but now I want to understand this mysterious credit score. I know it's based on the report, but like, how is it calculated and what makes it different?
Think of your credit score as a snapshot of your creditworthiness. It's a 3-digit number, usually between 300 and 850. That's calculated using a complex algorithm based on all the info in your report.
So it's kind of like a grade for how well I'm handling my credit.
Yeah, exactly.
Like a higher score means I'm an A+ student.
Right.
And a lower score means I need to hit the books.
Exactly. And just like grades, a higher score generally means you're seen as less risky to lenders. That means better interest rates, higher credit limits, more favorable terms on loans and credit cards. Someone with a 750 score, for example, might get a mortgage rate that's a whole percentage point lower than someone with a 650 score. And that can save you thousands of dollars over the life of a loan.
Wow, that's a big difference.
It is.
So who comes up with this magical algorithm?
Right.
Are we back to those credit reporting companies again?
Not quite. This is where it gets even more interesting.
Okay.
The formulas behind those credit scores are actually developed and owned by companies called risk modelers.
Okay.
The most well-known is FICO, but there's also VantageScore.
Right.
And a lot of lenders even have their own proprietary systems that are tailored to, how they do things.
So the bureaus collect the data.
Uh-huh.
The modelers make the scoring systems.
Yep.
And the lenders use those scores to decide.
Yeah, there's a whole ecosystem.
It is. It's complex. Doesn't that mean there are, like, tons of different scores floating around?
Yeah.
Do I just have one score? Or do I have multiple scores depending on who's looking?
You're right to point that out. You actually have lots of different scores.
Okay.
Sometimes even hundreds.
Wow.
Based on all these different scoring models and what each lender needs. This is why you might see different numbers on, like, websites or credit card offers.
Right.
It's not because your credit is going haywire. It's just that different lenders are using different ways to measure risk.
Okay, that explains why I've seen different numbers. It can be confusing.
Definitely.
How am I supposed to keep track of all this? Is there any way to, like, make sense of it without getting totally overwhelmed?
Don't worry, it's not as complicated as it sounds.
Okay.
Even though the exact numbers might be different, the core things that affect your score are pretty much the same. By understanding those core factors, you can get a good handle on what drives your creditworthiness.
Okay, give me the cheat codes. What are the biggest things that can make my score go up or down? What should I really be focusing on?
The two most important factors are your payment history and your credit utilization.
Okay.
These are the heavy hitters in most scoring models.
All right. Payment history, that's just paying all my bills on time, right?
Yeah.
Seems pretty straightforward.
It is straightforward, but it's crucial. I mean, consistently paying all your bills on time.
Yeah.
Credit cards, loans, utilities, even those streaming services we talked about.
Right.
It all matters.
Okay.
Late payments can really tank your score, especially if it becomes a pattern.
Right. It's like a report card for how I handle money.
Yeah.
What about this credit utilization thing? What does that even mean?
Yeah.
And why is it so important?
Credit utilization is how much of your available credit you're actually using. It's a balancing act. A good rule of thumb is to keep your utilization below 30%. So if you have a card with a $10,000 limit, you want to keep your balance under $3,000. Maxing out your cards or constantly carrying high balances can make lenders think you're relying too heavily on credit, which can hurt your score.
So it's not just about having a high credit limit. It's about how I manage it.
Exactly.
That makes sense.
Yeah.
Let's say I'm working on improving my score. Are there any, like, quick wins? Any secret weapons I can use to boost it faster?
Actually, yeah, there are a couple of really innovative tools from Experian that can make a big difference.
Okay.
One is called Experian Boost. It's free, and it can help your score almost instantly.
Experian Boost. Tell me more.
Experian Boost analyzes your bank statements to find positive payment patterns for things like your utility bills, phone bills, even Netflix.
Okay.
And then it adds those on-time payments to certain scoring models, which can boost your score. This is especially helpful for people with limited credit history or those who are trying to rebuild after a setback.
So paying my phone bill on time can actually improve my credit score.
It can.
That's amazing. How much of a difference can it make?
On average, users see a 13-point increase in their FICO score after using Experian Boost.
Wow.
In some cases, it's been the difference between getting approved for a loan or getting a better rate. The impact depends on your individual situation, of course.
Right.
But it's a powerful tool to have.
That's incredible. Is there a catch? It sounds almost too good to be true.
The main thing to remember is that Experian Boost doesn't affect all credit scores.
Okay.
It mostly impacts scores used for things like personal loans and credit cards, but it's not currently factored into scores for mortgages.
Got it.
But it's still a fantastic option for a lot of people.
Okay, that makes sense. I'm definitely going to check it out.
Yeah, do it.
What about that other tool you mentioned? The one that sounded like magic.
That one's called Experian Go.
Okay.
And it's specifically for people who are starting from scratch with no credit history at all. Imagine having no credit score and then, boom, a score appears.
Right.
It's a game changer for young adults, new immigrants, anyone who hasn't built a traditional credit footprint yet.
It does sound kind of magical.
Yeah.
How does it work? Do we need a fairy godmother?
No fairy godmother needed.
Okay.
Just a smartphone and the Experian app.
Okay.
You download the app, answer some questions, and Experian builds a report for you based on alternative data, like your banking history and utility payments. It's a revolutionary way to get on the credit map and start building a positive history from day one.
This is blowing my mind. I had no idea these kinds of tools even existed.
Yeah, they're pretty cool.
It's so important to have options for people who are just starting out or facing challenges in building credit.
Absolutely.
It feels like a step toward making things more fair.
It is. Experian Go is a powerful tool for creating greater financial equity.
Right.
Especially for communities that haven't always had equal access to credit.
We've covered a lot of ground here.
Right.
Credit reports, credit scores, secret weapons for boosting your numbers.
Yeah.
It's a lot. But I'm starting to see how it all fits together.
That's what it's all about. Knowledge is power. The more you understand the credit system, the better you can navigate it and reach your financial goals.
So what about all the new trends popping up in the credit world? Things like buy now, pay later, and all those medical debt changes everyone's talking about.
Right.
Do those affect my credit score? And how do they fit into this whole picture we've been discussing?
Buy now, pay later has become so popular.
It has.
But it's a little bit of a mystery, right?
Yeah.
Is it good or bad for your credit? Should you be using it? It's kind of a gray area right now. Buy now, pay later is so new and operates with limited regulations. It's a bit of a wild card in the credit world.
Okay.
It can be a really convenient way to manage short-term expenses.
Right.
But there's also a risk of getting into debt if you're not careful.
What makes it so risky?
The tricky part is that it's not currently reflected on your traditional credit report.
Okay.
So lenders don't have the full picture when they're checking your creditworthiness.
So, I could be racking up debt through these buy now, pay later plans,
Uh-huh.
and it wouldn't even show up on my credit report.
Yeah, that's the concern.
That's a little unsettling.
It is. The credit bureaus are aware of this and are working to add buy now, pay later data into credit reporting, but it's still in progress.
So they're playing catch up with this new trend.
They are, but there are efforts being made to address it.
Okay, like what?
Well, Experian is actually creating a separate credit bureau just for buy now, pay later data.
A whole separate bureau. That's a big deal.
It is. It shows how important this is becoming. So for now, it's important to be super careful when using those services and make sure we're not getting in over our heads.
Right. What about medical debt? I've heard some good news about how it's reported now. Can you fill us in on that?
Sure, there have been some big changes, and they're good news for a lot of people. As of July 2022, paid medical collections are no longer included in credit reports.
Wow, that's huge.
It is.
So if I've paid off an old medical debt, it's like it never even happened.
Exactly. And the waiting period before a medical collection shows up on your report has been extended to a whole year.
Okay.
That gives you more time to take care of it before it affects your credit. Plus, starting in 2023, any medical collection under $500 will be completely removed from reports.
That's fantastic news. It really takes some pressure off people who are dealing with medical expenses. It seems like the credit world is always changing, which can be overwhelming.
It can.
How can we stay on top of all this and make smart decisions?
Staying informed is key.
Okay.
Check your credit reports regularly from all three bureaus, use those free educational resources they offer, and don't be afraid to reach out to a credit counseling agency if you need help or have questions.
It's good to know we have access to all that and that we're not alone in figuring this stuff out.
So as we wrap up this deep dive, what's the most important thing for our listeners to remember? Why does all of this matter so much?
Your credit score is way more than just a number. It's a gateway to financial opportunities. It can really impact your life.
It affects your ability to get loans, rent an apartment, even get certain jobs.
Right.
Understanding your credit and working to improve it can open doors to a better financial future.
It's like having a key that unlocks possibilities.
Exactly. And it's never too late to start building or rebuilding your credit. With the right knowledge and tools, anyone can take control of their financial well-being.
Absolutely.
Yeah.
We've covered so much today, from how credit reporting companies work to those awesome tools like Experian Boost and Go, and even the latest on buy now, pay later and medical debt.
Mm-hmm.
We've really taken a deep dive into the world of credit.
We have. Here's something to think about.
Okay.
As you learn more about the credit system, how can you use that knowledge to advocate for yourself and others, especially for those who might face bigger challenges in building good credit?
Right.
The power to make a difference starts with knowledge.
That's a powerful thought. Knowledge is power, and by sharing what we've learned today, we can help ourselves and the people around us make better financial choices and create a more equitable credit system.
Exactly. Keep learning, stay curious, and never stop exploring.
And remember, it's all more fascinating than you think.
It is. Your salary and what you buy at the grocery store are not part of your credit report. It doesn't track your income or bank balances or any specific purchases. It's not about judging your spending choices, just your history with credit and debt.
So my late-night online shopping sprees are safe, huh? That's a relief.
Uh,
But what about things like bankruptcy? Are those public records part of the report?
yes, bankruptcy is included, but it's the only public record that's really considered relevant to your creditworthiness these days.
Yeah.
The focus is really on how you handle debt and credit, not every aspect of your financial life.
Okay, that makes sense. So we've talked a lot about the credit report, but now I want to understand this whole mysterious credit score thing.
Yeah.
I know it's based on the report, but how's it actually calculated? And what makes it different?
Think of your credit score as like a snapshot of your creditworthiness at a specific moment. It's a 3-digit number, usually ranging from 300 to 850, and it's calculated using this complex algorithm based on the information in your report.
So it's kind of like a grade for how well I'm handling my credit. A higher score means I'm an A+ student, and a lower score means I need to hit the books.
Exactly. And just like grades, a higher score usually means you're seen as less risky to lenders. So that means better interest rates, higher credit limits, and more favorable terms on loans and credit cards. For example, someone with a 750 score might get a mortgage interest rate that's a full percentage point lower than someone with a 650 score. Over the life of a loan, that can save you thousands of dollars.
Wow, that's a significant difference. So who creates this magical algorithm? Are we back to those credit reporting companies again?
Not quite. This is where it gets even more interesting. The formulas behind credit scores are actually developed and owned by companies called risk modelers.
Risk modelers. Okay.
The most well-known one is FICO, but there's also VantageScore. And a lot of lenders even have their own proprietary scoring systems that are specifically tailored to their lending practices.
So the bureaus collect the data, the modelers create the scoring systems, and then lenders use the scores to make decisions. It's like this whole ecosystem.
Exactly. It's a whole complex system.
It is. Doesn't that mean there are like tons of different scores floating around for each person? So do I just have one score or do I have multiple scores depending on who's looking?
You're right to point that out. There isn't just one credit score per person. You actually have many different scores, sometimes even hundreds, based on all the different scoring models and the specific needs of each lender.
Okay.
This is why you might see different numbers on different websites or credit card offers. It's not necessarily because your credit is wildly fluctuating. It's just because different lenders are using different models and data points to assess your risk.
Okay, that explains why I've seen different numbers pop up. It can definitely feel confusing. So how am I supposed to keep track of all this? Is there a way to make sense of it all without getting overwhelmed?
Don't worry, it's not as complicated as it might seem. Even though the exact numbers can vary, the underlying factors that influence your score remain pretty consistent.
Okay.
By understanding those core factors, you can gain a good grasp of what drives your creditworthiness.
All right, give me the cheat codes. What are the biggest things that can make my score go up or down? What should I be focusing on?
The two most impactful factors are your payment history and your credit utilization. These two elements hold the most weight in most scoring models.
Okay, so payment history. That's paying all my bills on time, right?
Hmm.
Seems pretty straightforward.
It is straightforward, but it's also crucial. We're talking about consistently paying all your bills on time, credit cards, loans, utilities, even those streaming services we talked about earlier.
Right.
It all adds up. Late payments can really hurt your score, especially if they become a recurring pattern.
It's like a report card showing how responsible I am with money. But what about this credit utilization? What does that even mean?
Yeah.
And why is it so important?
Credit utilization refers to how much of your available credit you're actually using. It's a balancing act. A good rule of thumb is to keep your utilization below 30%. So, for example, if you have a credit card with a $10,000 limit, aim to keep your balance below $3,000. Maxing out your cards or consistently carrying high balances can signal to lenders that you're relying heavily on credit, and that can negatively impact your score.
So it's not just about having a high credit limit. It's about how responsibly I manage that limit. That makes a lot of sense. Now, let's say I'm actively working on improving my score. Are there any quick wins, any secret weapons I can use to boost my numbers faster?
Actually, there are a couple of innovative tools from Experian that can make a big difference. One is called Experian Boost. It's completely free and can have a positive impact on your score almost immediately.
Ooh, Experian Boost. That sounds promising. Tell me more.
Experian Boost analyzes your bank statements to identify positive payment patterns for things like utility bills, cell phone bills, and yes, even streaming services like Netflix. It then incorporates those on-time payments into certain scoring models, giving your score a potential boost. This can be especially helpful for people with limited credit history or those who are working to rebuild their credit after a setback.
So paying my phone bill on time can actually improve my credit score. That's amazing. How much of a difference can it make?
On average, users see a 13-point increase in their FICO score after using Experian Boost. In some cases, it's been the deciding factor in securing a loan approval or getting a better interest rate. Of course, the impact varies depending on your individual credit profile, but it's a powerful tool to have in your arsenal.
That's incredible. It sounds almost too good to be true. Is there a catch?
The main caveat is that Experian Boost doesn't affect all credit scores. It primarily impacts scores used for personal loans and credit cards, but it's not currently factored into scores used for mortgage lending. Still, it's a fantastic option for many people.
Okay, that makes sense.
Yeah.
I'm definitely going to check it out. What about the other tool you mentioned, the one that sounded almost like magic?
That one is called Experian Go, and it's specifically designed for people who are starting from scratch with no credit history at all. Imagine having no credit score, and then with a few simple steps, a score appears. It can be a game changer for young adults, new immigrants, or anyone who hasn't yet established a traditional credit footprint.
It does sound like magic. How does it work? Do I need a fairy godmother?
No fairy godmother required, just a smartphone and the Experian app. You download the app, follow the prompts, and Experian essentially builds a credit report for you based on alternative data sources like your banking history and utility payments. It's a revolutionary way to establish credit visibility and start building a positive credit history from day one.
This is blowing my mind. I had no idea these kinds of tools existed.
Yeah.
It's so important to have options for people who are just starting out or facing systemic barriers to building credit. It feels like a real step towards financial inclusion.
Absolutely. Experian Go is a powerful tool for fostering greater financial equity, especially for communities who've been traditionally underserved or excluded from traditional credit scoring systems.
Oh, we've covered a lot of ground here. Credit reports, credit scores, secret weapons for boosting your numbers. It's a lot to digest.
Yeah.
But I'm starting to see how all these pieces fit together.
It's all about empowering yourself with knowledge. The more you understand the credit system, the better equipped you are to navigate it effectively and achieve your financial goals.
So what about all the new trends popping up in the credit world? Things like buy now, pay later, and all those medical debt changes everyone's talking about. Do they affect my credit score?
Yeah.
And how do they fit into this bigger picture we've been discussing? Buy now, pay later has gotten so huge these days.
It really has.
But it feels kind of like mysterious.
Right.
Is it good for my credit or bad for my credit? Should I even be using it?
Yeah, it's a tough one. It's kind of a gray area right now because buy now, pay later is so new and there aren't a lot of regulations around it yet. It's a bit of a wild card in the credit world. It's super convenient, for managing those short-term expenses.
Yeah.
But it's also really easy to rack up debt if you're not careful.
What makes it so risky?
Well, the thing is, it doesn't show up on your traditional credit report. So lenders don't actually have the full picture when they're trying to figure out how risky you are.
So I could be, piling up debt through these buy now, pay later plans, and it wouldn't even be on my credit report.
Exactly. That's the worry.
That's kind of scary.
It is. The credit bureaus know this is a problem, and they're working on adding buy now, pay later data to credit reports, but it's going to take some time.
Okay, so they're trying to catch up with this new trend.
Exactly. But there are some things happening.
Like what?
Well, Experian is actually creating a whole separate credit bureau just for buy now, pay later data.
Whoa, a whole separate bureau. That's how big of a deal this is.
Yeah, it is. It really shows how important this is becoming. So for now, you just got to be super careful when you're using these services and make sure you're not overdoing it.
Right. Okay, what about medical debt? I've heard some good things about how that's reported now. What's the latest on that?
There have been some big changes, and they're good news for a lot of people. Since July 2022, paid medical collections aren't included in credit reports anymore.
Oh, wow.
Yeah, it's huge.
So if I paid off an old medical debt, it's like it never happened.
Exactly. And they've extended the waiting period before a medical collection even shows up on your report to a whole year.
Okay.
So that gives you more time to deal with it before it affects your credit.
Right.
Plus, starting in 2023, any medical collection under $500 will be totally wiped from your report.
That's awesome. It really takes the pressure off people who are dealing with medical bills and stuff. It seems like the credit world is always changing, though.
It is.
It's hard to keep up. How can we stay on top of it all and make sure we're making good decisions?
Staying informed is key. Check your credit reports often. Use those free resources the bureaus offer. And don't be afraid to reach out to a credit counselor if you need help or have questions.
It's good to know we have all those resources and that we don't have to figure it out alone. So as we wrap up this deep dive, what's the big takeaway? Why is all this credit stuff so important?
Your credit score, it's way more than just a number. It's a gateway to opportunities, and it can really impact your life.
Right.
It affects getting loans, renting an apartment, even some jobs.
It does.
Understanding your credit and taking steps to make it better can totally open up a better financial future.
It's like having a key that unlocks possibilities.
Exactly. And it's never too late to build or rebuild your credit. With the right knowledge and tools, anyone can take control of their financial well-being.
We've learned so much today, from how credit reporting works to those tools like Experian Boost and Experian Go, plus all the latest on buy now, pay later and medical debt. It's been a true deep dive into credit.
It really has.
Here's something to think about. Now that we know more about the credit system, how can we use that knowledge to speak up for ourselves and help others? Especially folks who have a tougher time building good credit.
That's a great point. Knowledge is power. And by sharing what we've learned, we can help ourselves and the people around us make smarter financial decisions and build a fairer credit system for everyone.
It all starts with understanding, right?
Absolutely. Keep learning, stay curious, and never stop exploring this world.
And remember, it's more interesting than you think.